I hope you guys are having a great day today. I want to run through what is NOI and basically demystify the whole subject of how to figure out what the NOI is and actually what that means in terms of a business, okay, or evaluating a business. So put together a little presentation for you guys so you can get a better understanding of how to find the NOI, net operating income, and then what does it mean, okay? How would you use this when you evaluate it? And then once you know what it is, how you apply it to a cap rate and how this will give you a value of a business, okay? So basically demystifying what an NOI is, the secret formulas of evaluating real estate and business profitability, okay? Let's learn what NOI or net operating is and how to calculate it. Okay, first, understanding what is NOI. It's a calculation that basically determines the profitability of an income producing property, okay, or a business. Now, make sure that you know that once we find out the NOI does not include your financing, your mortgage or your principal and interest. And I can explain that a little bit later, but you want to be able to value a business strictly off of operating income and expenses, because someone might buy a property for cash and that may give them a different return in this business. But if they're financing it, well, then that's a whole different story. So the business is what it is, and it's valued based on what its NOI is, okay? Again, in simple terms, it's just your income minus your expenses, but you need to know what income to add and what expenses to subtract. Again, at the end of the day, it's your real cash flow, and this helps determine the property's value and performance. So the first step really, and that's step one. Step two is really gathering all sources of income. So I'm going to use an example here of like a 10-unit apartment complex, okay? So what you want to do is you're going to want to be able to get what we call a rent roll, or you want the rental income, okay? So what is the landlord, what are they receiving in terms of rent from the tenants, okay? And then, so you gather that information, you'll get the monthly amount and you'll times it by 12. But also include in that income is what we call other income. So you want total income. Other income could be late fees, utility charges. A lot of times, apartment complexes include the water and the sewer, trash in the rental fee. So you want to know if that's included or that's an add-on. Then also even electric could be included sometimes. So you need to know whether they're paying that extra or not. Also, pet fees is another fee. Cable and internet, application fees, etc. You get the idea. But that goes under other income, and then we have rental income separated. Okay. So the example again is going to be a 10-unit apartment complex. As I mentioned, review the rent roll. And when you get all this information, you're going to find out what your gross monthly income is, okay? Once you know what your gross monthly income is, then you can generally times that by 12. There's also a report called a T12, which then pulls all the months together exactly. That gives you a 12-month total. If you don't have it, you only have 1 or 2 or 3 months of that, then you would annualize that. But basically, your NOI is based off of an annual assumption or accumulation of the income. Next, what you want to do is also, when you're doing this, you need to make sure you account for vacancy and delinquency, okay? When I say vacancy, it's very unusual that an apartment complex of 10 units or larger is rented 100% of the time. A lease ends, someone doesn't renew. There's a eviction, or someone has to, they have to cut their lease early. Okay, and so there's different things that happen. So you want to make sure that you always apply at least a 5% vacancy rate. When we underwrite, we normally always use a 10% vacancy rate, okay? And so anyways, what you do is you find out what that total or the gross rental income, not the other income, but the rental income, and you would times that by 95% or 0.95, and that'll generate your net annual income, okay? So you have your gross, and then you'll do the vacancy, and that'll equal your net annual income. I do have an example, okay, which we'll show you. So for instance, okay, we have 10 units, a variety of units here, 2 2s, a 2 1, and a 1 1. What I did here, I just put the average rent per month, okay, for each category or each rental type. And then what that total is for that category per month. And so let's say in this case, they're doing $12,950 if they were to get all units rented at these prices per month. Then you just take that number, the 12,950, you would times that by 12, and now you'll get your gross annual income. If you then find out what the vacancy rate is, in this case, it's 5%. 5% of 155,400 is 7770. So now your net annual rental income and other income is 147,630. Okay, so that's the number we're going to use going forward as the net annual income. Now that you have the net annual income, we need to determine what are the expenses. The expenses are rather general. I mean, they're usually the same for the most part. There can be some other items that pop up, but for the most part, you're going to have a property management fee. And maybe for a 10 unit, you're managing it yourself. But usually when you're valuing a property, you throw in a management fee just to make sure in case you don't want to have to manage it, what the value of that property looks like. So we usually throw a management fee in. Where'd you go? There it is, management fee. And then what maintenance items? So when somebody moves out, you need to get it repainted. You might have to have the rugs cleaned, have a cleaner come in, things like that. Get the units painted. You may have some plumbing issues, electrical issues. So anything to do with maintenance, that's a line item for expense. Obviously, your insurance, property taxes, and then utilities, okay? Water, sewer, trash, electric, cable, internet. Those are the basic utility fees. Again, some may be included in the rent, some the tenant may be paying themselves. So if a tenant is paying the electric, then of course you wouldn't keep the electric in there, but you may have a bill for like parking lot lights, right? And so you're going to have some type of electric input. So grab all the expenses that you are responsible for and add them up, and this will get you your net operating expenses, okay? Again, remember the mortgage payment is not included, or usually like a one-time capital expenditure. A great example is, let's say like a new roof, okay? Usually those expenses are what we call, they go below the line because it's not a normal month in or year out expense. You usually don't, put a new roof on every year. So your net operating income, again, does not include mortgage payment or capital expenditures. And again, here's another example of pulling all your expenses together. Maintenance, utilities, contract services. Again, you need to have the lawn service, right? Pest control. You're spraying the units to make sure the bugs and that kind of stuff aren't there. If you're up north, you may have snow removal. So there's some items that could be a contract service, insurance, property taxes, and property management. Again, you find out the monthly total, and then you times that by 12, and that's where your annual expenses turn into $72,363. Okay, so now we have the net annual income, and we have the total annual expenses. And now that we have those, we can figure out our NOI. Total annual income, 147. Total annual expenses, 72,363. So your net annual income is 75,265 in this example. Okay. So if you look at that, that's pretty close. It's saying that your expenses are just about 50%. Just under 50% is really what your expenses are, and that can be fairly typical when it comes to um, residential real estate, okay, especially apartment complex. So now, NOI, what can you do with this? Now that we know that $75,000, 267 is your net operating income. Okay, well, what does that mean? Okay, so in the world of buying property, okay, and how to determine a value, you start to get into a thing that's called a cap rate or a capitalization rate. Okay, and this is what the business professionals and real estate professionals use, bankers, and so on, to use to value a property. They want to know what the property's net operating income is, and then they will determine, based off of recent sales, what is the cap rate of a similar property, okay? So for this example, we're going to say the cap rate is 7%, okay? So if the cap rate is 7%, what you do is you take the net operating income and you divide it by 7%, or divide it by 0.07, okay? This will give you the property's estimated value. So basically, this property that's clearing 75,267 at a 7 cap should sell for about $1,075,000. So now you can look at a property by knowing the NOI, and if you're looking for properties and say, okay, they're asking 1.3 million, they're high. Let's see what's going on here. Now, maybe there's some value add opportunities. Maybe they replaced all the appliances and everything. The place is completely redone. So, your maintenance fees and that kind of stuff may be much less than what a normal property would go for. So, again, this is an estimated value of what the property should go for. Okay. I hope this has been very helpful for you guys and helping you to try and determine what a property's NOI is, how to determine the income, how to determine the expenses, what's included in those calculations, and then how that equals an NOI. And then how you'll use that NOI to get an estimated value on a property. If you're looking to get more information, or you'd like to see this presentation, or you'd like a copy of it, let me know. Feel free to email me at my email, my last name, Pinchatti, REI@gmail, or you can text me, or this will be on Facebook or some other social media site. You can also message me on there and I can get it to you. Well, the other thing I did real quick on this presentation, I added like a little summary, which breaks it down very quickly. Calculation of income, how you do the vacancy rate. Here's the example. How to do the expenses, again, list them out, how you get them, okay? The summary on NOI and cap rate. So again, real quick, just a couple slides. You may just like to keep them to reference them. Again, have a great day. I hope this is helpful, and we'll be doing more of these. If you need, again, any help looking for investment properties, apartments, hotels, residential homes as well, we handle it all. Okay? Have a great day, and I hope this was helpful.